Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And the S&P 500 finally recaptured a very critical level today, okay? They recaptured the 380 level. We broke down this level back on November 2nd and this triggered a big drop, okay? That was the FOMC. Now we're back above it. Could this mean more upside is incoming? Okay, like always, we got to play this unbiasedly and let the price action guide you. And we're gonna talk about the setups and triggers. Let's go. Okay, so we're looking at a 15-minute chart here. Okay, so market open up pretty easy, being able to easy trading. Pretty much, okay, one direction for a couple of hours up to 11:30 before giving us the false breakout setup. Okay, you guys know how I feel about the false breakout and the false breakdown setup. They are my favorite trade setups. Okay, but besides those setups, I usually look for calls when a resistance clears on the 15-minute chart. And as you can see here, worked out great. Boom. All right, and it led to a nice level move. All right, that's on a smaller time frame. And I play it level to level, went from one level to the next, okay? When it gives us a false breakout setup like this right here, we clear a resistant level, then close back below it. That's a false breakout. That's a time to enter puts, okay? So we had a false breakout here. Do not need to call tops. Just look for that false breakout setup, in my opinion. But we had a false breakdown setup right there. From setup to setup. False breakdown, we break below a support and then recapture it, and it led to a nice $5 move, $4 move in the end. Hit that 384 level, resistance level that I got, and now it's starting to push down. Okay, that's how I trade it on a 15-minute chart. Now on a daily chart, the approach or the concepts are pretty much the same. Okay, except it's on a daily chart, bigger time frame. Okay, so with this clearing or recapture of 380, okay, that would be a bullish sign because we cleared a critical resistant level. All right, so what this means is for us to be able to recognize the setup based on the price action. So 380 to the 380.4 zone must hold tomorrow. Okay, if it does not hold tomorrow, then today was a false breakout based on the daily chart. Okay, we just trade based on the setups. Okay, that's the bearish case scenario. Very simple. We cleared 380. If it breaks back below, very similar to this setup right here, that's a false breakout setup. All right, and we possibly see more downside. Okay, so below 380 tomorrow, Uncle Charters will switch to bearish and play the false breakout setup. However, as long as 380 holds, bulls have a shot at more upside, okay? As long as 380 holds, this is not a false breakout. This would be a legit breakout, okay? But the bulls must show follow through tomorrow, okay? Bulls must show follow through because one close above resistance is just not enough. All right, because there's always the false breakout scenario. There's always the rug pull, especially in a bear market. Always got to worry about that rug pull. Okay, so very simple. Below 380, switch back to bearish. That's a false breakout setup. As long as 380 holds, the levels I got above is 382 with 384 above that. As you can see, it was market respected 384. Okay, so above 382, 384, 386. 388, 388 previous pivot high around here, and with 390 above that, that's the 50% fib level. Okay, from August high down to October low. As long as 380 holds, bulls got a chance at more upside. But if it does not hold, false breakout setup, look for puts. Does that make sense? Keep it very simple. Triple Q, I mean, it's a mixture, right? In intraday, it tested that 23.6 fib level, and it gave us a strong rejection, okay? However, it did manage to close above above a level that I got around 269.5 ish. Okay, I'm referring to the June low. June low was around 269.2 ish, and Triple Q managed to close above that. So it's it's a mix. It's conflicting to Uncle Charters, okay? Because it looks both. I'm seeing both bearish price action and some bullish price action, okay? But the one thing I can say is Triple Q must stay above 269.2 ish. All right, I would be more bullish and feel more comfortably bullish, short term at least, if Triple Q clears 263. Today, we got somewhat of a hot stove rejection from that level. Okay, so it cleared 263.2. If it fails to hold above that tomorrow, then you know that this close above today, this weak little close above that level today was a false breakout. Get bearish. False breakouts are bearish. Does that make sense, guys? So above 273 is where I would feel more comfortably short-term bullish, all right? So watch if 269.2 can hold. It's below that right now in the aftermarket, but you guys know how it is. A lot can change overnight, okay? So pretty simple. Below 269.2 with the 267 support below that. Those level fails, get bearish, okay? And then there's Tesla. All right, it managed to bounce. I had a level around 187. Okay, it was a previous pivot low. Okay, back last year, but it managed to bounce there. Okay, so right now I do have some resistance around 194, 196.5, and one previous pivot low around back in October at 198.59. Okay, so 194. 196.5 for the gap fill, 198.59. If you're bullish on Tesla, you want to see Tesla clear those resistant levels and see if it can backtest this bear flag. And the resistance of the bear flag is around 204-ish. So above 204-ish would be a recapture of this bear flag, and I would feel a lot more comfortable being bullish on Tesla there. Okay, but as of right now, it's looking extremely, extremely bearish. And as long as we're below the October low, which is 198.59, as of right now, bear buys on Tesla. All right, guys. So we're going to end this with the option flow. Filter for 500K premiums or above. Here is the SPY and 77% into puts. Okay, big money is bearish on it as usual. We got a block order here, 33.8 million. Okay, over 5,000 in size. It does have a strike price of 450, so it's very in the money, but the expiration date is December 16th. Okay, that's something worth paying attention to because that's a lot of money. All right, this one 4.1 million in premiums, a block order, institution, 5,000 in size, 373 strike price, December 16th. Okay, so we're seeing big money still betting to the downside on SPY. Okay, 98% in the puts. Holy moly, look at 9.3 million in premiums for these. Big money is betting to the downside. And look at this block order, 20.6 million in premium, over 5,000 inside. November 18th date, 310 strike price, very in the money, but still that's a lot of money. 72.5 million, over 9,000 in size, 350 strike price. Okay, in the money, but look at this, over 16,000 in size, 67 million in premium, 86 million in premium. This is a lot of money that big money are betting to the downside. Okay, they putting in puts. I'm just showing you what the data is showing me, guys. And look at Tesla, 83% in the puts. Okay, seeing a lot, millions and millions and millions, $110.7 million in puts. Okay, this is interesting. 466 strike price though. That 2024. Okay, so guys, these are a lot of puts. Could they be hedges? What are they hedge? I don't know, but that's what the data showed me. We're gonna have to do some further due diligence on this. All right. So thank you guys so much for watching. Peace.